Hello everyone, how are you? Welcome to another episode of the Tuesday webinar. Welcome. So I'm going to go through some stocks because we've some serious news coming up, as in earnings. It's in the next week or so. So want to make sure that you're well equipped for what's going to happen, for what we expect to happen, and then if the likes of these stocks come back into key areas, what we're looking to do at those particular points. Now, if we look at the likes of Apple here, we have this super uptrend going up quite quickly, and they have done well since the beginning of January. Since the beginning of the year, they have done extremely well. So by looking at that there, we actually have a trade that we could be placing right there on this particular position. So your entry will be long there, and your stop loss would be below it right here, and then your take profit on this would be a 3-to-1. So that's what we're looking for. So the take profit on this one is just right there, well, slightly above it. Okay, but we'll leave it at that there. So that's the idea. So we're looking at that as our entry, our stop loss, take profit. We're looking for the market to continue doing what it's supposed to be doing. So we have our stop loss there at 163.61, entry at 165.99, and then the take profit at whatever number that is there, 173.22. Now the problem with this is that if we look here, see this high? We had a double top here in this high, and from there we have actually went up to here. So we've actually had a decent higher high. Then from here to here we've had another decent higher high. But from here to here, you could argue that that is a double top. So the market has slowed down. So there's a couple of other scenarios we need to sort of look at then, if that is the case. Now, if that's the case and we expect the market to drop a little bit, we do have a potential horizontal level there where market could come back to. Okay, so the market could come back to that horizontal level there. Or we have a much smaller level just directly underneath that there. And these are all things that as a trader we have to go through. So should we have a trade here? Should we put a trade there or here? Or none of those scenarios? But these are all things that as traders we have to work out. We have to look at. We have to make sure. We have to see, are we correct? And if we look historically, we have, that seems to be a pretty decent level. 1 touch, 2, 3, 4, 5, 6, 7 touches. So that there seems to be a really nice level to be actually buying. So if it comes back to there, that would be a really decent level to be buying. We expect the next wave of buyers to come in, but will that happen? If we look at earnings, so earnings are the 4th of May, okay? So we're literally more or less a week away. So 7, 8, 9 days. We're 9 days away from earnings coming out, but will it come the whole way back down to there in this particular time? And the probability of that is no, it probably won't. So in that particular scenario, then we have to be looking potentially at this level. And also the next thing we have to look at is, do we think the earnings are going to be good? Do we think the earnings are going to be better than the last quarter? Are they going to be better than the same quarter last year? Are we actually going to hit the earnings? Is the earnings that we're expecting now revised? Or do we think that it is on point and it will exceed? So they're all the sort of things that we have to be looking at. They're all the things we have to be sort of taking into consideration when we're looking at earnings. So a very quick and broad overview. If we look at this, and I'm just zooming out, look, so from when was that 2018 or 17? So 2017, okay, so from 2017 to now, Apple has only had 2 bad earnings, which is phenomenal. And if we look at the earnings last quarter, earnings was down and revenue was down, which was a little bit of unheard of with Apple. But even on the back of that, it has taken off. We also have the likes of Apple Bank that they've opened. Now, another thing to consider here is the record high. If we do take that long, are we expecting it to hit the record high and then drop? Or do we expect it to continue going up? So there are other things. So once we get into a trade, we want to be able to look and see when we're looking to exit this trade as well. So these are all sort of things we have to look at. But over the next 10 days, I would probably expect it to come back or move sideways. They're the 2 sort of scenarios. Do I expect it to come the whole way back to here? No, but ideally I want it to come back to there, but I don't expect it to come back that far. Facebook. So Facebook has been on a really big tear since the beginning of the year. Well, the end of last year. But it's funny. It's funny that, look, it's had 1, 2, 3 bad earnings and it's still flying. It just goes to show that there's a bit of an appetite for this, and people are expecting this to turn around. People are expecting Meta to get stronger. So from November, which was the low, if you jumped in anywhere around there, up to where today is, you're actually up 142%, which is phenomenal run on the likes of that. We are still a little bit away from the record highs. You have a look at them. So up here, we still have a long way to go to the 385 mark. But if we have a profitable earnings here, if we have profitable earnings, which is tomorrow, we will have probably a big jump on this. So we've had bad earnings here, bad earnings here, bad earnings. Look, the revenue has changed. Earnings were bad and revenue is bad. Revenue was okay here, earnings were bad. Here, revenue is good, earnings were bad. If there's earnings and revenue are on point here, this particular quarter, you would expect this now to pop to the upside. You'd expect this to continue going. Now, obviously, I'm not going to recommend anyone sort of jump into a trade with earnings tomorrow. But if you did take a long position on that, entry above that bar, stop loss below it, and you anticipated that the earnings were going to be good, and you get into that trade, there is a little bit of momentum there at this present moment. The momentum is telling me that we'd expect earnings to be good. I've zoomed out a little bit and I've had a little look for a horizontal level. And if we have a look there, we do actually have a pretty decent level. So we're at this one and we're just under this previous high here. So there is room for this to continue going. There is room for this to take off. There is room for all this to happen. So there is a potential there on this, even though we've earnings tomorrow. If we look at the pre-market, it's slightly down on pre-market. So slightly down on pre-market, but again, nothing substantial. Microsoft. Again, this one has down almost $1 on the pre-market. So we'd expect a little bit of a sell-off on the NASDAQ, the S&P, and the Dow. Well, on the NASDAQ. But what happens with the NASDAQ generally happens across the other markets. So you'd probably expect all three indices to be slightly down on the open at 0.5-2. For me, this one has to go down a little bit more before there's a potential trade there. If we look at this one, earnings has been good. Earnings has been good. Revenue was slightly down. And again, we have earnings on the 25th. So today. So we've earnings after the market close. We have earnings coming out today. So it could be an opportunity to potential take a position if earnings are good. Now remember, if you're taking a CFD trade, the market may gap if it's really good. If it's not really good, the futures market will trigger you in, and then you go from there. But just be aware of that as well if you're taking a CFD trade. So we have big earnings coming out tonight, earnings coming out tomorrow, and then earnings next week. But for me, that would be the area there. If you're looking to take that, I would like that to come down a little bit more. If we're taking this trade, put some sort of a limit order on it. Long position, limit order. I want it to come down there. My stop loss will go underneath here because that's the previous low. So about there. Let's see where the 3-to-1 is first on this one. So about there. Let me zoom out and have a look. Okay, so we have to take out that high, which is not ideal, but there is still loads of room to go for us to hit anywhere near up where it was. Okay. So that's a limit order, so that's not triggered in. That's a limit order there. So let's see how that continues. It'll be probably triggered in when the market opens on this particular one. But let's see what happens. Amazon. So Amazon is pretty flat, if I'm being honest. It's pretty flat. They are struggling to become profitable. They are changing things quite dramatically, trying to make sure things are actually still running profitably. Anyone who is doing sort of the Amazon FBA or has a brand with them, they're charging you double what they did 3 or 4 years ago. So there's a lot of extra cost put onto small businesses on Amazon at the moment, and that's what they're trying to become profitable. But one of the things that we've seen here seems to have hit the floor. This seems to be sort of an area that it's looking like it's going to start pushing up from. But again, we still have to take out those highs. Do we expect Amazon to become profitable again? Absolutely. It's just a question of whether this is something you should stick back into your portfolio or whether you sit and wait. At the minute, from that high, it's down 43%. So if you've jumped in that, you're at the beginning of the year, or from there, you're 43% down on the high. If you're someone who jumped in from down here, again, we are looking at this, and you would be up 31%. So it depends on where you're looking from. But at the present moment, trading-wise, this is not something I would be looking to place a trade on at the minute. It's something that, for me, has moved sideways. If you're looking to invest in this, I'd be looking to invest rather than actually trade. And if we have a look at this Thursday is news, and it's coming out after the market close. So just be aware. If we're looking to get in this, you'd be looking to buy the underlying asset rather than a CFD trade. And if you look at this, there's probably about 70% still to go to the previous highs. If we go to about there, yeah, about 77%. So there's loads of room for us to go. There's loads of room for it to run. If we will look at Google, Google also has some earnings coming out. So if it's on today, so after the market closes again, there's earnings coming out. And if we will look at this, it's pretty flat again. It's very similar to the likes of Amazon, pretty flat. We've had a triple bottom there. So it seems like it has starting to turn. And the question is whether Amazon or well, Google can actually turn themselves profitable again. They missed earnings, the last 4 earnings, by pretty substantial amounts. And it's a question of whether they can actually turn this into a little bit of profitability. Any trade on this at the minute, again, very similar to Amazon. If you're looking and you expect earnings to be good and you expect this one to recover, it is you buy the underlying asset. There's no trade for us at the minute. We can see in the pre-market it's down slightly, but at the minute there's nothing there. There's no trades like there was on the likes of Facebook and the likes of Apple. To reach the high, we still have 43% return from that particular point. Anyone who's looking to invest, these 5 here and Tesla are all a decent little buy, but it's a question of at what point do you buy them. Earnings, before earnings, after earnings, or whether it's just you dollar cost average in each month. But if you're looking to trade this at the minute, there's no trade. Investing, yes, there is a little bit of investment on this. We have a little bit of room to go to the record high, and at one point you would expect that hitting there again. So Netflix earnings come out, and earnings per share were on point. Revenue is slightly down, but subscriptions were up substantially. So that's why it has had a little bit of a pop to the upside here. We did have a pretty good run on this over the last couple of months. Earnings last quarter was pretty poor, but they're doing an awful lot of work on the subscription sharing and people sharing the same passwords and all that sort of stuff. So that's something they are working on at the minute, trying to stop. We do have a little bit of a trend line there. Now, if that comes back down to there, that would be a lower high. And I understand that sort of breaks the rules in trading, whether we could be taking this long and it's a lower high. But Netflix is one of these ones that I don't have in my portfolio. Again, I could be wrong, but it's not something that I massively favor. But there is loads of room still for this to go to the previous high. If we look at that high up here, it has 112% still to run. So if you expect Netflix to run, if you expect there's still loads of upside on Netflix, then buying it at the minute wouldn't be a bad old investment. You still have 100% to get to where it has previously been. And then also trading wise, for me, there's no trade here at the minute. It has to come back down to here to potentially place a trade. But if you're investing, absolutely no problems with jumping in on that. Again, earnings was good, revenue was slightly down, but again, these sort of numbers, it's only 1%, less than 1%. It makes no real difference to the overall analysis on this particular on Netflix. Lastly, Tesla. So Tesla came out, its earnings per share was good, revenue was down 1%. Okay, if we will look historically, their earnings have been poor, but the revenue has been poor, but their earnings have been okay. So that's something that happens quite regularly with Tesla. If we look at the likes of this, it has loads of room to go to its previous high. So since Elon took over 157%. So since Elon took over Twitter, Tesla's taken a bit of a battering. Tesla have sort of lost their glow of invincibility. people have got a little bit annoyed with Elon himself. They have had a little bit of a tougher time in the markets at the moment, the EV. And also then you have the other companies out there who are slowly closing the gap. Tesla are slowly coming backwards, and the other companies are slowly heading towards Tesla. So that is why we've had this sort of big drop on the likes of Tesla. But getting back down to this low, me at $100 is a decent investment again in the likes of this here. But it's a question of will it pop up off the back of these earnings, or will it continue coming down? Because we have a clear downward trend coming down here. So we've actually made lower highs and lower lows. So the idea is do we start buying at these lower points? So for me, this is not a buy. It's probably the only one out of the top 5 here. Just 1, 2, 3, 4, 5, 6, 7. It's the only one out of the top 7 we've gone through that isn't a buy. But if it comes down to $103, that's where we'd expect it to start again. Anyone who wants in more detail of any of these stocks, reach out to me on either Discord or henry-ward.co.uk, and I'll be happy to go through in person or set up a one-on-one with you. It's been an absolute pleasure. Thank you very much. Bye-bye.